Hello, folks. Welcome to the Good, Bad, and Ugly weekly review of 14th of June. The markets have been good, but first, please read the disclaimer. So, this week from the Weekend Investing Research Desk, we had some fantastic stories. Uh, there was a story about how 11.9% CAGR on your hedge has been missed by most. Nvidia, the juggernaut, we compare Nvidia with some stocks from the Indian market. Uh, a lot of folks don't know how well their portfolios performed. They have not been tracking the inputs and outputs of their portfolio. They don't track the XIRR. So they have roughly no idea of where they are standing versus the benchmark. This is very important. You must have a firm grip over what your investments are doing. How to allocate stocks? One story on that. How one stock can change your fortunes. Are tech stocks more resilient this time? A database study on US presidential election and how the probability of that year outcome is there. Um, a couple of more stories. India story. Don't be afraid of markets. Some behavioral content there. Uh, all in all, we've had fantastic feedback from people regarding these content series, and these are small nuggets, small snippets, 3 to 5 minute type of videos. If you don't like watching videos, you can also read about it in our blog, and that comes on our daily newsletter direct into your email. Uh, so coming back to the markets, extremely, I would say, after the huge volatility of the previous week, where election results, exit polls first, and then election results caused a huge yo-yo in the market. This week was very, very subdued. You had almost 5 days of unbelievable, steady pattern. So almost on a daily basis, you had a gap up, and by evening you had a sell-off, gap up, sell-off, gap up, sell-off. But nevertheless, as an end result, the market has steadily moved up by a couple of 100 points, a little less than that. On the weekly, as I mentioned last week also, this kind of a weekly candle, at least I have not seen in my lifetime, where the candle low went as low as several months back and then closed at a high, and we have now closed above that candle also, so a new all-time high on a weekly close also. This is very, very bullish actually. I think from all candlestick patterns, if you have an extremely volatile candle and the next candle actually exceeds the extremes of that candle, it is a trend move in that particular direction. So it looks like a very strong trend, although the individual daily moves right now after this week of volatility has not picked up. So Nifty is gradually going up. Uh, you can see Nifty is up only 0.8%. CNX 200, CNX 500 gained 2.1%. Nifty Next 50, this is our favorite index. I've done several videos on it also. 3.9% this week. It's up 18% already in FY25. We are not even near the end of first quarter. Mid and small cap index 4.3%. Small caps did very well this week at 4.6%, also up nearly 17.6%. In terms of weekend investing strategies, MI20, MI35 leadership leading strategies for small caps and mid caps, small and mid caps on MI20, only small caps on MI35, both up 7%. MI20 has raised to 25.4% gains in FY25. MI20, MI35 is also up 22%. Phenomenal strategies, and this is coming on triple digit gains in last year also. HNI Wealth Builder, hugely diversified strategy up to for 50 stocks, up 6% this week, also 18.8%. MI25 also up 5.9%, up 10.6% here. HNI Capital Compounder 5.5%, 23.1% already. This is primarily large cap. 23.1% right here. Then you have NNF10, one of our probably the most loved strategy right now. plus 5.1% this week, 24.5% on the financial year, already taking a 6-point lead on the underlying benchmark. MIMT all cap extremely diversified, 4.7%, up 11 this week, this year. MI30 is 4.6. MI Evergreen, along with gold, is up 17.8%. India top 10, 4% this week. So it really has taken the cake this week versus its underlying Nifty. Nifty was up 0.8. India top 10 is up 4%. Overall, 8.6% for the financial year. ATH up 3.7, up 14, quite decent, I would say. ATH2 also picked up in the last couple of weeks, 3%, up 12.8%. Both these are also doing well now. NG 50/50 absolutely flat, but up 6% for the year year to date. Real estate continues to be the leader of the market. Again, up 25.4% this financial year, 5.6% this week. Public sector enterprise not too far behind, 4.9% this week, 18.5 on the financial. And then you had all other sectors at 3.2, infra 2.8. Autos doing extremely well also, 220%. Hyundai IPO is coming. All the uh, three large market share folks, M&M, Tata, Maruti, also gaining ground. Metals doing extremely well this year so far, 20% up. This week was slightly muted at 0.8%. So all in all, a very good year. The only the sector of concern so far has been IT. IT has been flat. Uh, FMCG also down minus 1.3% this week, but overall for the financial still quite good at 6.1%. Private bankings also have been very, very slow at 5%. Private banks, FMCG, IT actually in the last 12 to 15 months have not done so well. And that is why sector rotation, automatic sector selection, all that becomes extremely important in a strategy. So sectoral momentum over 2 weeks, 1 month, 3 months, 6 months, you can see the average is the best. The ranking is the best in real estate, autos, media, public sector enterprise, metals, and consumptions. And the list goes on. This also you can see here that media is coming up, primarily led by Z here. And you also have a fall in public sector enterprise and metals in the very last few weeks. Uh, so this is something to watch out for, whether this is a temporary fall or whether this will get picked up back again. You also had fall in infra, you had fall in commodities. So the ranking is falling. FMCG, in fact, the ranking has picked up in the last couple of weeks. Let's see where this goes now. So there are different ways in which you can interpret this chart, but the main interpretation here always remains that the top few uh, sectors which remain consistent through the year, these are the real strong ones, and the ones that are really down, pharma, IT, financial services, these are the real laggards of the market. Weekend investing strategy spotlight is on how to avoid the laggards. So these are the worst performer from Nifty 50 in the last 12 months. And you know, I mean, I'm not trying to rub it in, but these are the big names that are there in almost every portfolio. Asian Paints, Hindustan Levers, Kotak Mahindra Bank, ITC, HDFC. 1 year returns versus Nifty. So whatever Nifty has done, these have fallen short by this much versus Nifty. So this is the shortfall versus the benchmark. You should be much ahead with the benchmark, and this unfortunately is where we are in terms of big names. So a lot of times we will rush towards big names because the narrative around big names is very strong, and over a very long period, such established companies don't fail in terms of returns, but they give you a lot of pain in that process. There have been instances when Hindustan Lever did not move for 7 8 years. There have been now many years where HDFC Bank has not done well. There have been many years now that Asian Paints has not done well. So it all depends upon what is your patience level. um, Can some disruption happen in that industry? Maybe everybody now wants to do paint, so maybe Asian Paints has lost that kind of a growth pool. Uh, Maybe artificial intelligence may derail some of the tech stocks to some extent. So all that is extremely possible because we live in a world of disruption, and if we are going to wait 5 years for the stock to start moving, and within 5 years the world has changed and your company was not able to cope up, then you are stuck with 5 years of loss, and then you don't know what to do at that point. I mean, so it's always best to, in my view, is to not have attachments with any particular stock or sector, and allow the momentum to guide you where you have to go, and just see the top 15 names versus the Nifty. So Coal India, 87% more than Nifty. Bajaj Auto, Mahindra Mahindra, Hero Moto. Some of these names were shunned names of the last many years. Power Grid, ONGC. Nobody used to touch these stocks. NTPC, Bharti Airtel, BPCL, Hindalco. All these have done extremely well versus the Nifty. India top 10, picking the strongest stocks out of Nifty, and none of these stocks are present in India top 10. So India top 10 really picks the strength out of the Nifty, and this is how since last uh, January, when we sorry, the current year January, 25% gain has come out in these 10 Nifty stocks that India top 10 selects versus 7.6% on the Nifty. This is how it's like you are dissecting Nifty, by saying there are three layers of Nifty. One are bad performers, one are average performers, one are top performers. We want to stay with the top performers. And the strategy, while it always wants to stay with the top performers while churning, there may be some small periods where we may not be able to do that, but over a longer period of time you will always find that staying with the strength in the market always helps. And that's what this is extremely depictive of this last almost 6 months now, that you've been able to get 18 points in Nifty in 6 months. It's amazing, actually. I myself get amazed, that this kind of performance is possible by just using simple methodologies. So MI India top 10 is a extremely robust and go-to strategy for even a new comer to the markets. Nifty is that bunch of stocks who you have to sort of blindly believe in, and within Nifty, if you are able to extract the alpha by looking at the strength, there's nothing better than that. So if you don't have India top 10, do consider adding India top 10 to your portfolio. I think this is a great diversification to have if you have the rest of the large cap, mid cap, and small cap stocks in your portfolio. This is all I have for today. Thank you so much for watching, and do stay connected through YouTube. We are also having content on our Weekend Investing app and as well as on Twitter. Thanks. Bye.